kind of slowed, so we shall begin. So good morning, everyone. Welcome to the latest Digital Watercooler. Today we're going to be talking about financial well-being. We're also live on YouTube, so if you are watching us on YouTube, welcome and thank you for joining us. For many years now, I think employees have been asking their employer for guidance around their financial well-being. And since the arrival of coronavirus, this request we've seen has become even more urgent. As we experience a shaken economy, disrupted employment, and a complete overhaul of working conditions, employees are having to withstand more stress this year than perhaps there has been since the 2008 financial crisis. As we go through today, as usual, these digital water coolers are kind of unrehearsed. Me and Matt haven't had a conversation about what we're going to talk about. We would like you to lead that as much as possible, so please give us your questions, comments on thoughts. Ask us about kind of what we've seen in the market, what our opinions of what's going to change, what the future looks like, or share your own experiences of what your organization is doing. I know there's some Benefits customers who are listening live as well, so I know you've done some great things. So please let us know about what you've been doing and how you may have changed your financial wellbeing strategy, or indeed even started one because of the whole coronavirus pandemic. But just before we kind of get going and to kind of get you thinking about what you might want to ask us, I just wanted to kind of talk a little bit about financial well-being, kind of as I've seen that over the last 12 months or so. And long before coronavirus hit our shores, we had record high debt and a stagnant savings habit in the UK. Like most of the world, we were just recovering from the last recession that happened kind of 10 years or so ago. And you know, before coronavirus, 6 out of 10 Brits said they regularly ran out of money before payday, with just 50% of people saying they could only go a month or less without having to borrow money if they lost their job. And that similar scenario was playing out all across the world. And then obviously a pandemic hit and 85,000 Brits and 40 million Americans lost their jobs. And that's obviously so far, and we expected that might get worse over the next couple of months. But we've also seen for those employees that kept their jobs, they've had to deal with reduced salaries and increased anxiety about the economy. And so what's happened since coronavirus hit is that a third of Brits are now more worried about their money than they usually would be. Almost 9 in 10 people say they feel hounded by their money worries. So that's significant. That's almost every employee feels hounded by worrying about money. And 2 in 5 people have reported an increase in financial anxiety because of the pandemic. And as a result, what we've seen, the research tells us that more than half of employees now say that money is their biggest wellness concern because of the coronavirus, more than any other area of well-being. And I think that's pretty significant because we're in the midst of the largest physical health pandemic that we've ever experienced, yet money is the thing that people are worrying about. And so, Matt, my first question to you was kind of, you know, we've been talking about financial wellbeing at Benefits for about a decade, really. When we first started, actually, it was almost when I first started at Benefits, we started some financial wellbeing products. And 2020, as I kind of mentioned, it felt like that was the year that employers were starting to really get their teeth into financial wellbeing and want to support their people. And then obviously 3 months into the year, this whole situation kind of exploded and accelerated that. So from your experience as CEO of Benefits, how have you seen that affect our customers and their employees and other employers outside of the Benefits community?
Yeah, I mean, great question. Morning, everybody. I think I agree with what you said. I think as we got to 2020, I thought that for the last couple of years, it felt like there'd been a kind of real build in kind of momentum behind financial wellness and people really starting to look at how they could tackle some of the big issues in their organizations and finding and putting money aside to help them do that and to help their employees. And then, like you said, the pandemic hit. And I think between redundancies and furlough and reducing hours, reducing pay, many of the people who were running those programs potentially being furloughed as well. I think that you had this kind of horrible situation where the focuses of most organizations went immediately to kind of, how do we get people remote? How do we survive? How is this impacting us? Understandably, but employees' needs for understanding around their own financial wellness and how to get back in control and really get ahead of where they needed to be kind of went the other way. So you kind of saw this kind of employees' needs went drastically up and the ability for a lot of organizations to do something about it went kind of drastically down. Now, not in all cases, but in a lot. But I think as we've seen the kind of pandemic unfold, I think it's been drastically different depending on where you sit in the market and really kind of the issues that you're struggling with. For some retailers and for some, organizations in travel and transportation, clearly they've been very, very heavily hit. And so their focuses have really been very staunchly focused on survival of their businesses and organizations. And at the other end, you've got some people, some other retailers, and you've got some parts of the market, growing significantly. And so what's interesting, though, is that actually we've seen a lot of, organizational empathy and a lot of organizations wanting to help people, particularly people that may be being made redundant or people who are on furlough. I think, to me, some of the stats that are really interesting and compelling is the amount of people who actually have, free money available at the end of a month, is a stat that I think should be worrying to us all, because any amount of reduced pay has a significant impact on those individuals. And I think there aren't many people out there, I think, that could sustain long-term, a 30% reduction in salary or more. And so I think it's no doubt at all, whichever publication you read, kind of, by every measure, we're all kind of individually feeling the pinch from a money perspective in 2020. And I think, we were just chatting about it at the start, Gethin, weren't we? But I think prices of pretty much everything has increased. And I think the pressure on households and organizations' ability to kind of help has kind of brought this kind of real pinch to life. And I think, though, I think there's still some green shoots in that. I think there's some really clever things starting to happen, and organizations, as we're just acclimatizing ourselves to the fact that this is probably the new norm, are really trying to help wherever possible. And I think that, for me, certainly, if I take a look at Benefex internally, I think, we're trying to give people the tools and the information and really trying to help them understand like what is going on, and just be very transparent about that, very quick and clear with the information. But yeah, there's definitely a kind of a gap that I felt was starting to close at the beginning of the year has probably slightly widened. I mean, I don't know if you would echo that or not.
Yeah, and I guess the budget thing comes back, right? So I think there was a report published in, I think it was REBA about 2 days ago, the Reward and Employee Benefits Association is talking about actually the big commitments employers made to well-being in the very first few weeks of lockdown. Actually, they've gone back to those people and said, have you kept up with those promises, the commitment to well-being and financial well-being? And about 55% have said they actually haven't been able to. So they haven't been able to enact their plans, or they haven't had the resources or the time to do that. And when they're asked why that's happened, the budget's been a big part of that, because obviously employees are squeezed, but organizations are squeezed as well, right? So actually finding the money to invest on these things at the moment is kind of, it might be seen as a bit of a luxury for some organizations. And I think that's been a really difficult balance for the customers and prospects I've spoken to, is about how do we help people when we might not have the resources to do so.
And I think the thing is, it's kind of like, whether we like it or not, as kind of employers, that situation is kind of forced upon us and the outcome of it. And so, the fact that you've got this many people now worrying about their money inevitably has an impact on all of us in terms of how people are working, how they're thinking about working, the things that they're doing, the stress, the mental health issues that go with that. We're kind of very much, as employers, we kind of have to do something, right? We have to pick up the pieces. And I think we're starting to see the age of being able to just point someone at a kind of EAP and say, I've done my job, are probably going. But the flip side of that is also that most employees, if you look at research that's done, a lot of employees, like in the Edelman Trust Barometer and things like that, if you look at them, the organization is actually the people they're starting to turn to. There's a huge distrust post 2008 in the kind of financial institutions of the world. And so actually, there is an increasing amount of trust, and it's probably one of the only institutions, i.e. the employer, that's seen that kind of constant increase in trust over time. And so there's also a kind of a positive element to that actually, done well and thought through and done right, it feels like we could have a much, an outsized impact on people if we do it well.
And one of the questions we've had submitted is from Jenny Carpenter. Thanks for your question, Jenny. She says there's so much volatility at the moment. How are you coping with that? I assume that's about kind of how Benefex is coping with that. And I think, as an employee, as your subordinate, Matt,
Crikey.
I thought what was fascinating is in one of our very first all-company calls about the pandemic and what was happening and the move to working from home, you made the effort to acknowledge that people will be worried about money, and you encouraged people to come and speak to us and said, we didn't want people to worry about money. Come and speak to us. And we were kind of, we didn't know what we could do, but we wanted to acknowledge that if that was something that was going to cause you stress, come and speak to us about it and see what we can do. And I was really pleased that we did that, because from all the stories I've heard since, not many organisations have actually acknowledged people worrying about money. They spent time talking about, we know you're going to be stressed, you're going to be working at home with kids, you're going to be working at a kitchen table, that might not be great for your back, and everyone acknowledged the mental health and the physical well-being challenges, but very few, I think, have picked up on actually the anxiety of not just your own financial well-being, but I guess financial well-being of the company that you're working for as well.
Yeah, I mean, thanks for the question, Jenny. I think from my side, I think it's been really interesting to see, because we've gotten, yes, we've got a large population here in the UK, but we have other offices around the world. It's been really different to kind of think about how we might be able to react and respond differently. And so, across the group, where we've got offices in India and we've got, offices in other parts of the world, you're starting to have to look at these large regional variances and large kind of global variances in terms of what's being decided, the impact of the pandemic on those areas, the ability for people to get access to, whether it's even basic things like Wi-Fi and a place to work from. It's been hugely varied, and so I think we've just tried to maintain a really open dialogue, which kind of with the global workforce is quite a challenge at times. But I think, as Gethin said, I think we just had to look at it as we don't know everybody's situation, and so I don't think pay or how much someone is paid typically dictates whether they've got financial pressures or financial worries or not. A lot of the research showed that when you're really looking at whether someone feels that kind of financial pressure, it typically comes down to, do you feel in control of your money? Do you understand where it is and what's going on? Do you have some kind of buffer? So do you have kind of either, savings or enough of a buffer to kind of, take a knock so the car breaks down, or, tiles blow off the roof, or whatever the example might be. Can you take that kind of knock? And then on kind of secondary to that is kind of then, do you feel like you can kind of, you can plan and take forward your goals, and do you feel like you can kind of occasionally treat those people important to you? Those four things together really create this feeling of financial wellness. And I think when you talk to people about money, it's obviously typically in the UK, but in other parts of the world as well, it's a very emotive topic. It's very difficult sometimes to put your hand up and say, yeah, I'm struggling with that. But we've just tried to really encourage that open dialogue, and I wouldn't claim we always get that right. But we really just think and believe in, the more we know, the more we can help. And I think, that's kind of the key thing for us. I hope that answers the question, Jenny. In terms of how we're coping, I think a bit like everybody, it feels like since, February, March, we've been kind of, running at 120, 130%. And I think I had a chat with certainly our wider board in kind of June, July, and said, look, I think this is switching from being a sprint to being kind of a marathon. And we need to think about it that way, is that this is going to be a long-term issue that's with us. And if we keep operating at the velocity we are, whilst we were doing some great things, we're going to just burn ourselves and burn everybody out. And so we just had to kind of look a little bit in the mirror and say, do you know what, we've got to think long-term, particularly how we could help people. And I think for us, wellness was a big part of that.
And I just wanted to kind of make a point of just about the 10 years that we spent looking at financial wellbeing at Benefix. In the last 18 months or so, we've been researching workplace financial wellbeing. And rather than look at what are people struggling with, because that's where lots of the research is focused, is, people are in debt, people are worried about money, all this kind of stuff. And we know there's a problem there. So we were really in the mindset of, how can we solve that problem? And how can we solve that problem knowing some of the challenges I mentioned at the start, where actually implementing big projects and spending money and time on that is a challenge for HR and reward teams at the moment. And so part of the non-commercial research that we did with King's College London, we interviewed at length HR and reward leaders to ask them what they weren't getting from the market at the moment and what additional support they needed. You can download a link to that report. We're going to put that in the chat now, so you can kind of download that report for free and have a read of that. We've also been working with Engage Success to find out what employers needed, and our parent company Zest recently spoke to HR and payroll people about their financial wellbeing challenges. And found that less than half of employers actually offer programs to help employees make better informed choices. And we also discovered that HR and reward teams wanted support that helped employees get the basics right. And they told us that they wanted financial education content that was easily digestible and accessible anywhere, anytime. And I think what we've seen, and certainly from my own research, is that has never been more important at the moment, because actually the time pressure everyone's under, you can create great content hubs and that kind of stuff, but people just do not have the time to go and read lengthy content. We've got a question related to it now about retirement savings, which I'll come on to shortly, but people are not going to read the pension brochures that we keep sending people, because it's too difficult. It takes 25 minutes to read about kind of 500 words or so, 1,000 words, and so it takes too much time for us to read this stuff. And so I think it's really interesting how we can look at commentary that's come out from the OECD and the Bank of England over the last couple of months that says actually financial education and short bursts and easy to digest financial education is now more important than it was before the pandemic. And like I said, that's coming from the OECD and the Bank of England. And so to pick up on a question we've had submitted, so this is from Anonymous. How can we improve retirement savings? We still find it such a challenge to engage our people in their pensions, especially when they're struggling with money at the moment. It's not easy to direct money to retirement when our people are struggling today. I imagine something that lots of people are facing. I read something the other day that 1 in 5 people have halted or reduced their pension contributions to free up money. So kind of, Matt, pensions has been part of your life, like it or loathe it, for a long time.
You're making me sound really exciting there, Gethin. I'm sure everyone wants to hear the next bit.
Well, how do we do that? How are we making pensions exciting? How are we, how the benefits and our customers, how have we seen people make that, I guess, a stale-ish product look a little bit more exciting?
I mean, I think there's been loads of change in the pensions industry, right, over the last kind of 5 or 10 years. Obviously, big focus on auto enrollment. But I guess where I've seen people kind of really start to do things that I think are clever is this kind of acknowledgement, I think, that we really have to, yes, plan for the long term for people and help them to do so. But I also think that there's a lot of acknowledgement from organizations that the financial world that people are coming into now is very different than it probably was, even 5 or 10 years ago. And the flexibility that I've seen a lot of organizations start to adopt with kind of, being able to, potentially divert monies that would have gone to pension or part of those into something that enables you to save maybe shorter term, to look at things like being able to put a deposit down on a house or potentially solve some other challenges or things that you might be saving for, I think is probably where I've seen some of that innovation. I think clearly the kind of, DB to DC train is still not finished, and it's going to carry on happening, so that, we're going to continue to see final salary in all its senses, I think, close over time. But I think, the real kind of engagement and innovation, I think what's really interesting is if you look at the data, we saw a real spike in actually people who are kind of under 25 and their interest in pensions. And if you look at the data, actually, we've seen a lot of interest in that age group. And I don't know whether it's the living through the pandemic. I don't know whether it's kind of parents of people that age and what they've been saying to them or what, but actually the fastest growing areas of pension membership across all customers, when you look at the data, is actually that group. And when I say pension membership, clearly everybody is auto-enrolled, but when you look at people adding additional contributions and additional amounts, it's really interesting to see the level of interest and engagement in content and in the overall benefits themselves from that age group. And I think, we've done some work to talk to them. There's a real mix of reasons and rationale as to why, but by and large, I think you have, a generation that's come into quite a chaotic work environment. And I think pandemics probably amplified that even more, but you kind of had, them living through financial crisis, them living through kind of the age of the environmental crisis, and obviously Greta Thunberg, all these things that they've joined kind of the world in a state of flux, I think is causing people to think much more medium and much more long term. One of the smallest things everyone can do, though, which is really interesting, and if anyone's interested, I'll send you the study. There was a brilliant study done by a neurologist on how you make people save more for their pension. And what was really interesting is they showed that I think it was either 2 times or 3 times. You put in 2 or 3 times more money if you talked to employees in days, so the days they had to retirement, rather than years and months. And it was a really fascinating study to read, because it's this psychology of actually, I think when you start to see, I'm a bit like that with big numbers, right? When you get into hundreds of millions and billions, it kind of all starts to blur and it's not really real, right? So by making it real in days, I think it was really fascinating to see how many people suddenly were able to relate to that and think, wow, that's not long, right? In terms of how many paydays I've got to go or how many actual physical days. And that actually spurred quite a lot of additional action. So.
And I think the interesting thing I think about the pensions and people's this idea that young people aren't engaged in pensions, because that's something we obviously hear quite a lot, that young people aren't engaged in pensions. You know, I remember when auto enrollment first started in this country, and one of the first big bits of news that came out was, I think it was someone like McDonald's had a really low opt-out rate, and it was quite a surprise to everyone because these were typically low-paid people under the age of 25 working in that environment, and it wasn't an environment where you expected to see a low opt-out rate. And so I think that was kind of fascinating to see. And I think, you know, we've spoken before on lots of these webinars about we're shifting the language away from pensions to retirement, because I feel like if you try and get people to shape what a lifestyle might look like when they reach a certain age, rather than talk about it just in terms of pensions, we seem to be getting somewhere. And we're working on quite a big kind of comms project at Benefex at the moment that's looking at this, but it's almost the idea that we can say to people, okay, you might not retire at 65, but if you've got the choice at 65 to drop to 3 days a week or 2 days a week, then you start to give yourself the option by even just saving some money towards your retirement. So all you're looking at maybe doing is topping up some of your income as opposed to just focusing entirely on your income being from a pension, which I think is fascinating.
Yeah, and I agree with you. I think there's going to be, I think we're moving into an era where retirement dates will become something fictional. You know, I think you'll end up with people doing all sorts of blended things as they kind of approach older age, which might mean they carry on working part-time. We need to adjust it. There's some brilliant stuff. If you get a chance to go and have a look at someone like BMW, there's lots of stuff they've got online about how actually with their aging workforce, who are incredibly skilled in some of the manufacturing things they do, how they've adapted the environment around people as they're growing older. So for example, you know, the way that they used to have to move in and out of the cars, they've now made it so the cars move around the people. And actually it means that, you know, the person can actually stay in you know, a position that doesn't require, you know, huge amounts of movement, or certainly doesn't require, you know, a certain level of fitness that perhaps historically they may have required to do. So I think you'll see lots of adjustments like that. And I think the fascinating thing I've seen in pandemic is the amount of people who I heard about who were furloughed, or who I knew who'd been furloughed, who were opening up kind of, you know, side gigs, and we're going to go do this and sell that and, you know, make money in all sorts of other different ways was really fascinating as well. But I think, yeah, like you said, I think back to pensions and retirement, I think there's going to be a kind of short, medium, long term and a reality, I think, for most people when they get to retirement.
One of the questions we've had through YouTube, I can't see who it's from, but it's how can we make our insurance products, which I think are important to push, look more attractive to staff? Anyone that's kind of listened to some of our previous webinars, and we've got one coming up with Anne-Marie Russell from ACCA next week, who's on the call at the moment, I can see. So thanks for joining, Anne-Marie. We've talked before about, you know, we've seen a massive uplift during the pandemic in benefits that were typically quite stale. And we talked about this on our Lockton webinar, which we had 2 of actually. We talked about actually people are starting to seem to like reappreciate some of these old stale white collar type benefits like life insurance and income protection, because suddenly we've been given this big reminder that our lives are finite, and actually a loss in salary, falling ill, that stuff could happen to us all quite easily. You know, the rainy day that we were told to prepare for kind of happened. And we've seen a massive spike in people showing an interest in taking up those benefits. And I think I've seen employers do some really clever things where they're talking about the benefit of those products more than the product itself. So if you look at how income protection, as an example, is described in most benefit platforms, it's a pretty dry topic. It doesn't really massively explain what it is. But when you start to talk about the fact that, you know, in the UK, 1 million people will be out of work because of an accident or illness for long term and won't have the income to pay their mortgages or rents. And then when you start to show people that, you know, the vast majority of income protection now pays up for mental health, you know, 1 in 3 of us will get a serious mental health problem in our lifetime. So all of a sudden you start to show people these are actually real risks you can insure against. So it's not like a home insurance product or a car insurance product that you kind of hope you never use. You know, these risks are probably a little bit more than having an accident in your home. And I think showing people those products and the problems they solve seems to be getting a little bit more interest than just talking about the kind of the ins and outs of the product, which is kind of what we used to do. We've had another question from Ant Donaldson. Hi, Ant, very good friend of Benefex. Ant says, Have you seen any examples of holistic financial well-being offerings making a difference? Example, pensions, long-term, share plans, medium-term, ISAs, credit unions in the short term, payroll loans, debt management needs, knowledge resources, and alongside risk benefits and so on. And does it need sustained comms and an explanation to really deliver a step change? Did you want to take that first?
That's a big question. So I think we have started to see it. I think for me, when I look and think about kind of putting together something that's kind of more holistic from a financial well-being perspective, I think most people are fairly, not trying to run anybody down here, but most people are fairly lazy when it comes to money. We're quite reactive. We'll do what we have to do. Getting people to kind of think and plan. And I'm sure on this call, there's a number of you who are those, you have your budget, you run your budget, and you're really kind of deep into understanding where your money is and how you control it. I think for a lot of other people, what we've got to make sure when we do any of these kind of financial wellness initiatives is that we think about relevance, and we think about personalization, and we think about how it becomes relevant to them as an individual. I think there's nothing worse than you roll out this fantastic new initiative and all it's actually doing is sending pretty generic content and information across to kind of all employees. We all know that at the run up to April the 6th, there's an ISA window and we can save some money, right? You get told that by the entire world. You probably don't need a holistic financial wellbeing offering in your employer to tell you that as well. I think what is useful though is to really start to think about some of the challenges that people are actually experiencing and the ways that we can help them. Inevitably, we've got a role as an employer to get people to think about long-term, whether it be pensions or other types of savings. But I think the interesting thing for me is actually every single day, every single month, many of our people have challenges in the way that they actually think about money and the things they have to do. That might be not understanding an insurance that they have to purchase. That might be they've gotten themselves into a situation with debt that they cannot therefore manage. And I think it's down to us to make sure that on some of those huge areas where we know that there is significant demand and lots of employees experiencing that. And, Gethin and I can furnish anyone here if you're interested with maybe the top 20 issues that you typically see when it comes to financial well-being in the UK, and there's obviously slight differences for the rest of the world. But when you look at that data, we can really help people in a number of these areas. And so I think I would always encourage people to, don't kind of eat the elephant, start small, really look at what you can be impactful on, what can you really commit to. I think that any initiative that helps an individual better understand their situation, feel in control and take action is something that I'm a huge fan of. And I think that it's the bit around understanding that I think sometimes is a little bit missing in the market. You see a lot of kind of product answers to things. So, I'm going to put in a wage advance program because it helps people at that immediate short-term moment. But I think what we've got to do is we've got to look and say, okay, somebody's running out of money at the end of the month. We clearly don't want them to get a payday loan, but we've got to look at how we help them understand how they get out of that cycle. If it's very short term, actually, in some instances, putting that money on your credit card is better than getting any kind of advance from anybody because it won't cost you anything. But you need to know that you could get yourself out of that in the next payment, which not all people can. I do understand that. So I think that, I think you should think about it in a very holistic way about all the ways that you could help an individual. And what I would then go do and always recommend to people is go really deep in one area and really, really help people there. And then go pick off another one and another one and another one. I think often the ones I see fail are where it's just very, very, very broad brush. And I think you kind of dilute because, I haven't yet seen any technology in the market that's really good at the personalization piece. And so you end up with, I log in and I'm like, well, none of this is relevant to my situation. So, do you know what? I'm going to go off and have a look at the plethora of personal financial tools that are out in the market, which again, I have mixed views about. Gethin, I don't know if there's anything else you'd add to that. Oh, just to finish off, sorry, one thing. I would say everything around this does need sustained communication. And I think that's because not everyone will engage day one. Not everyone will understand they have an issue day one. And money issues come up all the way through the year at different times for different people. And I think people being aware of what you do and what you can give them access to, I think is absolutely key.
I think, I've ran probably 30 wellbeing workshops with benefits customers and prospects and competition winners and all sorts over the last 8 months. And overwhelmingly, most people's approach to all elements of well-being is reactive, not proactive. So, you know, an EAP system is there when somebody is in crisis. You know, no one's going to use an EAP or mental health first aider just to get themselves in a good place mentally. It's kind of to solve a problem. And I think where we might have failed with financial well-being in the past is that we've really focused on how do we get people out of debt, and we've made the assumption that people in debt are in a kind of crisis or have poor financial well-being. And it's just, from my experience, it's just not the case. You know, Matt mentioned at the start about we have this emotional connection with money, and I might have £500 on a credit card and lose sleep over it, but my partner might have £1,000 on a credit card and not lose sleep over it because they feel in control of their financial situation. And there's loads of research to back this up. And so, and even if you look at the country, less than 19% of this country are in what we'd call problem debt. So although there's been a heavy focus on debt in the market, actually most people aren't worried about or struggling with huge amounts of debt. Yet the market has very cleverly worked its way towards debt because there's money in selling money to somebody, right? It's solving that problem makes somebody else a lot of money. And so I think where we've seen people take this really nice holistic view, exactly as Matt said, is where you're just trying not to do everything for everyone at once, but you're trying to find out broadly what the problems are in your organization. And we talked about this before as kind of being a value on investment. So actually, the only way you'll ever really find the real answers when it comes to money worries is if you ask people what they're worried with and what they need support with. But also bearing in mind, people don't know what they don't know. So some people don't even understand what some of their challenges might be. And there's a lot of research as well that's come out in the last, actually a piece that came out in the last week from a behavioural scientist in the FCA, which looked at do people in overdrafts feel more concerned about their finances than people not in overdraft? And that overdrafts were used as a measure of somebody not balancing the money in and out. And they actually found that that wasn't necessarily the case. They actually found that across this country, overdraft usage actually isn't that huge. Most people have got less than £200. The next biggest amount is less than £500, so £50, sorry. So most people don't use or have huge amounts in an overdraft. But what they basically found is that the biggest factors that controlled somebody's confidence in their financial situation was the amount they earn. So the more money somebody has, generally, the more in control they feel of their finances, which is pretty kind of standard and largely obvious, although there's plenty of exceptions to that. But it was actually about that control again. It keeps coming back to how in control do I feel? And I think so much of that is about information, because the more information we've got, the less stressed we feel about things. And there's a great guy called Dr. Gabor Mate, who's got Freedom of Canada and has written loads of books, New York Times selling author. And he looks at stress, and he basically found that not enough information causes stress in almost any circumstance. So the more we know about something, the less likely we are to worry about it. And I think that's fascinating when we apply that to financial well-being. We've got another question that's come in. What's your view on US lifestyle wellness accounts? Do you think we'll see more of these in the UK? I don't know if you want to answer that, Matt. I know from the workshops I've been doing, that seems to be a growing trend in the UK. We've actually got a webinar coming up with a customer. We're trying to book it in at the moment to talk about what they've been doing with wellness accounts. But I've been quite astounded by the impact it's had on individual employees.
Yeah, I think for me, it's one of those areas where this kind of leans back, I think, to the fact that we don't know everyone's situation. And so actually one of the ways that we can help them is to give them access to funds to go and do what helps them, to help them feel, you know, better, well, other. And because that can be so many different things, right? I might love going on a spa day versus someone else might, you know, love a yoga retreat versus someone else might just need, you know, to go and get, you know, physio on something or whatever else. You know, there's kind of the limits you put on these accounts kind of can be, you know, driven by you entirely. I think they do have a role to play. Clearly, I think the pandemic has probably made people look heavily at how much they invest in these types of accounts. But I think when you look at how much actually probably gets spent on your employees' wellness versus perhaps other business expenses, it'd be fascinating to do a bit of a league table of how much you spend more on than the wellness of your people, because I think that would be, I think you'd be quite shocked. You probably spend more on pens and paper than you do on than you do on your employees' wellness. But I do think they have a role to play.
Well, I think somebody told me this morning, somebody we both know, Matt, you probably work out who it is, but somebody told me this morning that most companies spend more on toilet paper than they do on being. So it's, that's a fascinating stat that they'll probably farm out as much as they can. We've had a question from Stuart Young. Thanks for your question, Stuart. Are there any new benefits on the market that could help staff with their finances? It's fascinating because I think, kind of related to one of the previous questions from Ant, the market has evolved so much as far as I've seen it over the last kind of 2 years, and a whole host of new products have arisen in the market, and they've brought with them their own challenges. Because one of the things we're finding out quite significantly with our customers is the choice is too much. And actually, if I'm a reward and benefits person, if I'm trying to look at what tools are out there and what ones might help my audience, I've probably got to go out and kick the tires of 50 different new products and providers. And it's obviously logistically, just that alone is quite a difficult task for most people to do. So we're certainly, as a kind of trusted advisor, seeing lots of people come to us to ask our opinion on the market. And I think what's been fascinating as well is if you have a background in research, and anyone who's kind of done a science degree or has kind of had experience of doing research, you don't take most research on face value. You kind of really look into it and kind of look for the integrity, the sample size, etc. And lots of these new providers are saying things like, buy this product and you will see financial well-being increase by 50%. And actually, what does that mean? How are they measuring financial well-being? What evidence is there? And so I think when you start to delve beneath some of these products, you can start to see that some are far less useful than they possibly look at the start. But we've seen a whole host of new ones enter. So as Matt said, wage advance. I think at last count, last week, there's now 10 or plus more providers in the UK offering wage advance. The FCA has got involved in those and has issued some comments fairly recently on the FCA don't think they solve the financial wellbeing problem and have advised employers to kind of proceed with caution. We've also seen this week with my own research that some lenders are now voicing concerns that if somebody's advancing their pay, does that show them as being stressed when it comes to their money? Therefore, should that be something they should be asking about when somebody applies for a loan or a mortgage? So again, lots of concerns coming out. And I think the fast pace of these new providers to the market means the adoption has kind of really ticked up as these new providers have arrived. And now people are starting to kind of take a breath and think, okay, what are we actually doing that's going to make a difference? And what, as Ant's question said, what collection of things are we putting together that's going to solve the problem? So, we could probably talk to you for hours about the new benefits, but, generally it seems to be focused on advancing people's pay, lending them money, and very few on the stuff we're talking about, as Matt's mentioned, about kind of how do we get people the information they need really quickly in an easy, digestible form. The stuff that we found out with our research at King's College London, I think is interesting as well. So the more I do these kind of consultations with our customers, the more I realize that actually I think that employers can do great things without spending much money and having to go and buy loads of products. I think there's lots that employers can do, and I'm happy to have a separate call with anyone who's interested to talk about that. I don't know if there's any that stand out to you, Matt, that you wanted to kind of make reference to.
Yeah, I agree with you. I mean, the first time we did one of these sessions all that time ago, there was about 6 or 7 providers that we were able to really talk about. And I think with the kind of fintech kind of revolution, as it were, I think you're starting to see the emergence of groups. I think you've touched on a few there, Gethin, of kind of advancing money, borrowing money. I think there's kind of a section of providers that are all about helping people understand their money. Obviously, Nudge is a good example of that. And then you've got all of these newer providers who are all about kind of, collect all your accounts together, help understand where you're spending your money, aggregate all of your account information together. And then the secondary part of that is then, we'll use AI or some other kind of, machine learning to kind of run all over those accounts and tell you where you can save money. And so I think, there is a lot out there. I think first time we did the mapping of the market, there was probably 10 or 12. The most recent mapping of that market we've done, there's an excess of kind of 120 different providers doing something financially. So we'll monitor your bills, we'll save you specifically, we'll monitor your mortgage and redo it for, there's a whole raft of different providers. And what we're really trying to do is get to the ones that work from an employer perspective and that you can actually start to help and offer out to employees. Because obviously a lot of those are kind of very personal finance focused. And we're still seeing in all the tests we run, there's a kind of real Marmite moment for people where they have to add their own personal account information. And so whilst open banking's been great, I think people willing to share their banking data with an employer provided app, I believe is still a barrier today, because you can say to your blue in the face, we're never going to get that data. We don't look at it. We don't see it. We don't have access to it. And there'll be a section of the population who are really comfortable with that. And there'll be a section who just aren't. And maybe that'll change over time. Maybe that won't. But I think, yeah, we as Gethin said, we can definitely talk to you for hours about the sorts of things we're seeing out there. And we spend a lot of time with brand new products as they launch, people who are thinking about that market, to really kind of work with them and see whether they'll be a fit for customers or whether it's something we just need to be aware of because their employees may be using those as well.
So Stuart, if you want any more information on that and how we're helping our customers kind of seek through the market and look at all the different providers, then
yeah, I see Stuart sent a follow-on question. Stuart, we'll forward you the FCA consultation on salary advance products. So we'll take a note to forward that on and follow up and send that to you. So it makes interesting reading. Obviously, it's still an open consultation, so they're welcoming views from anybody, opinions from everybody. But I think the long and short of it is their concern is it's unregulated. You've got a whole set of the market where you can advance money for a fee, and whilst those fees are lower, there's still a fee there. And do you get people stuck in a cycle? As Gethin said, it's not reported on your credit file, so they're concerned that someone who's already in distress and advancing money to themselves could compound it by getting further borrowing, and there'll be no impact on those. So it does make interesting reading. It's quite short. If other people are interested, just let us know. We'll circulate that to everyone as part of the follow-up.
yeah. So Stuart, if you want to put your email address in the chat, somebody will take a note of that. Otherwise, just email Gethin Nadin at hellobenefx.com and we'll get that across to you. We've probably got time for one more question. We had one that somebody submitted to me via Twitter yesterday, which I thought was quite interesting. We don't have the budget for this kind of stuff at the moment, but I really want to help. Is there anything low cost or free I can offer our people? I think from my point of view, as we mentioned before, it's coming up quite a lot. I think, in my personal opinion, there's a lot of great information that's out there on places like the Money Advice Service, Money and Pension Service. So that kind of content exists. As Matt said, there are tools out there that are free consumer tools that people can use to help their finances. And so I think where I've seen customers take some of that information and just surface the most relevant pieces of it is quite interesting. Now, it's quite a job to search through that content. You know, Money Advice Service in itself is a very extensive website, which I actually think is part of my criticism of it is it's you can't navigate it. As Matt mentioned before, personalization is really important when it comes to financial well-being. So an individual, you can't browse and pick up tips. You've got to be asking a specific question to get a specific answer. And so, as I mentioned before, people don't know what they don't know. So I think employers have got an ability to kind of surface some of that information. And I think, again, if you want to speak to us about how some of those customers are doing that outside of this webinar, happy to kind of take you through that. Just conscious of the last few minutes. So if anyone has any additional questions they would like to.
Gethin, we just had a follow-on comment from one of the attendees for everyone saying about speaking potentially to your benefit providers. They do have a lot of resources available for people, and they'll also, depending on what you do with them, they may also be willing to run kind of specific focused webinars on specific areas around wellness. So they are worth talking to as a kind of free resource. I think I'm a big fan always of thinking about, let's get really clear about where we think we can help people or where the highest pressure points are. And then I think you can go and find clear resources that are very helpful in those areas. I think, so much of the market is still just mind-boggling in terms of finance.
Yeah, and I think Anne-Marie's doing a webinar with us next week, which you can find kind of on the Benefix website. You can register for that, and so we'll explore that a lot more with Anne-Marie about how they've done that. And Anne-Marie and ACCA have actually won multiple awards for their approach to financial wellbeing. So if you're really interested in what other people are doing, that'll be a really good one to look at. Lucy Thomas has said, is there a standout financial wellbeing vendor in the market at the moment? Oh, what a great question. Do you want to answer first?
I think there's a lot of people trying to do some really good stuff. I think there's the problem I still have with it is the problem I had with it 10 years ago when you and I first talked about it, Gethin. And it is just so much that's just individually focused. And that's part of the nature of the finance market more generally, is that it's very disconnected and it's very product focused. It makes money by confusing the consumer. So you need these things. Let's just bamboozle you a little bit with how we charge and what we do, but you need it. So you kind of have to battle your way through that. To me, there's no one standout vendor. I think any of our customers that we're working with on financial well-being, I think you're having to connect a number of different things together today to really get to that kind of holistic financial well-being that Ant Donaldson talked about in his overall question. And I do think there is a big gap still in the market for connecting all of those things together. I don't know what your view is, Gethin.
Yeah, exactly the same. I think some products have got really good things for good people at different times. So in order to kind of use those products, we've got some financial wellbeing products our customers use that get kind of 20% take up, which is brilliant for those 20% of people that it's helping. But if that's the only thing you're offering, you've ignored the needs of the remaining 80% of people. And so I think, to Ant's point, our customers are having to take this holistic view of, I need to pick a few different tools, and then I need to find out how do I get those to the right people at the right time. Certainly something I think we're helping people with is to kind of bring that stuff together. But the market is evolving so much as well that some of these product providers are making roadmap changes and their products are taking big steps forward. There's new people coming to the market all the time. So again, I'd probably agree with Matt. Some of them have got some really good functionality and solve some really nice problems, but they also do some things that I'm not a big fan of. So I think it's really difficult to pick out a vendor at the moment. But there are some nice little features within some of those providers that, again, we're happy to talk you through in a different forum. We're just coming to the end now, so I just want to remind everyone that, as Matt said and I've said, we've been doing this for a long time. We have a huge amount of content available on the Benefex website around financial wellbeing, so you can kind of read our opinions on how financial wellbeing affects Black employees, gay employees, employees part of the LGBT plus community, how it affects women, older workers, younger workers. We've taken a really kind of intricate look at financial well-being with all the content we produced over the years to look at the specific challenges, the interplay between kind of diversity, well-being, benefits, reward, recognition as well, or how all these things come together. So if you go to our resources page and search financial well-being, you will find all of that. We're also continuing to offer free wellbeing consultations for any customers or prospects who are interested. We've ran quite a lot of these over the last 10 months or so. We decided at the start of lockdown we wanted to be able to help employers in whatever way we could, and we identified pretty quickly that people wanted to fast track some of their wellbeing strategies, so we wanted to be able to offer the opportunity to offer some selected employers the chance to do that and see if we could help them for free. So if you'd like to be entered into that competition, you can use the bit.ly/free wellbeing URL, and we've entered that into the chat functionality as well. But if you want to contact us at any point or kind of tweet us, we'll get you that link. Some really big global brands have benefited from those sessions where we've been sharing our in-depth research and our views. People have been able to ask us questions, and we're also exploring what other employers at Benefex have been doing to kind of show you over the last year how they've been helping their employees. And as I mentioned, next week we have Anne-Marie Russell, award-winning approach to financial wellbeing at ACCA. They've been a customer of Benefex for a long time. Anne-Marie is probably one of the, I would say, most impressive people in our market looking at wellbeing in general and financial wellbeing. A very evidence-heavy approach that has been taken by Anne-Marie and her team to look at actually how we're making a real difference to people, how do we track that, and leading with an incredible amount of passion. So I'm really looking forward to that, and I think it's a genuine privilege for us to get people like Anne-Marie to spend time with us on these webinars. So please register for that one as well. And all that's left to say is thank you, Matt. I know you're really busy. I know speaking at these things on Friday is probably not high on the list of things that you'd like.
No, it's great. I love these things.
Okay.
Compared to the rest of my list for Friday, Gethin, this is brilliant.
Excellent. Thanks everyone for your questions, and thanks for joining. If you have any follow-up questions, please contact us. You can find us on Twitter, LinkedIn, or you can email hello@hellobenefex.com, and we'll get back to you. Thank you very much for listening. Thank you.